We've told you that the U.S. apartment market performed surprisingly well in 2010 given lukewarm economic conditions, and perhaps no market better characterizes that story than Chicago. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Windy City Update. Market Research 101 tells us that there's a significant correlation between apartment demand and job change. But common sense doesn't always hold true, and Chicago is case in point. Take a look at annual job change rankings for the U.S. As a whole, and you see Chicago at the bottom of this list with 51,300 jobs lost in the year ending November, which is the most recent data available. And of course, Chicago has a large employment base, so it wasn't the largest loss on a percentage basis, but still, 51,000 jobs is a lot no matter how you cut it. And yet, surprisingly, Chicago's apartment market outperformed the U.S. norms and by a pretty good margin. Take a look at occupancy growth. Occupancy for the U.S. as a whole improved 1.7 percentage points in 2010, and it's up 2.2 points in Chicago. And overall occupancy is now at 94.2% in Chicago versus 93.5% in the U.S. And let's look at same-store rent growth in 2010. Rents jumped 3.5% in Chicago versus 2.5% nationally. So why is that? Well, quite honestly, it's pretty hard to tell, as the underlying economic data does not really explain the story we're seeing in the apartment market, which, by the way, is based on a survey of about 120,000 units in the Chicago area. But one thing we do think is a factor is a shift back to traditional apartments from for-rent condos in the urban core and from rental single-family homes in the suburbs. The shadow market traditionally plays a big role in Chicago, but in the past couple of years, the demand has gone away from those units and back to traditional apartments. So, real quickly, let's give you a couple storylines on the submarket level, starting with in-town Chicago, a real good story here. Lots of new apartments built in the past couple of years, another 2,562 units completed in 2010, but demand topped concurrent supply in 2010 and occupancy climbed 0.6 percentage points, and same-store rental rates are up 2.9% year over year. But the real star performer in 2010 was the South DuPage County, Naperville area. Occupancy here improved 2.6 points in the past year to bring the rate up to 95.6%, pretty much in line with the pre-recession level, and same-store rents jumped 5.2% in 2010. So that wraps us up for Chicago. Until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.